In today's video, I am going to be talking to you about some of my favorite and also some of the best Vanguard ETFs that you could also look at as well, and maybe a possible potential addition to your portfolio. Let's get down and let's check these out. So this first one is the Vanguard Global Momentum Factor ETF. CAD means Canadian, VMO. From there, basically what we're looking at is a really good ETF. It does have a low average volume, but there's some really good holdings in this, and I'm surprised how it's actually such a low volume ETF. From there, we actually have a 0.35% expense ratio, which basically means that if you were to invest $100 into this ETF, you would have to pay 35 cents every single year. So you would hope that this ETF basically goes higher than that much every single year, so you don't have to really worry about that MER. Of course, if you were to invest $1,000, it'd be $3.50, and of course that just keeps on jumping higher for however many zeros you add onto your amount that you invest. From there, it does pay a dividend, but it's only a once per year dividend, and it's a 0.6% dividend. It's not massive. But from there, what we do see over the last 5 years or so is that it's gone from roughly $27.50 per share, and it has absolutely ridiculously spiked ever since, especially recently since the coronavirus pandemic. Isn't it funny, every time the government prints money, it just so happens to end up in the stock market and make companies richer, which also makes us investors richer? Kind of funny how that happens. So this ETF holds Apple, PayPal, ServiceNow, AMD. I actually am kicking myself because I owned AMD at less than $3 per share, or $3 or somewhere around $3 per share. Now it's trading upwards of like $80+ per share. That's just a kick in the butt, isn't it? But Tesla, I have my own story, and I've shared that about on this channel about Tesla before. I'm a massive, huge fan of Tesla. I currently invest in Tesla, so does my dad. But I used a lot of the Tesla money that I made to buy my Mustang, which was originally supposed to be for Tesla, but I seen the Mustang and I had to get that before I made enough money on the Tesla stock. But if I still had the Tesla stock, I'd be close to $100,000. So that $35,000 car that is actually still valued at more than $35,000. I got a good deal on it, but that has now essentially cost me $100,000, which is kind of a kick in the butt. But I love my car, so I'm not complaining at all. Nvidia, Lululemon. Isn't it funny how it says global, but these are all American companies? But its weighting system is mostly consumer cyclical, as well as healthcare, industrial, and technology. Next is the Vanguard Canadian All Cap Index ETF. This is actually another interesting one. It has some great gains over the time. It does pay a 2.6% dividend with 145,000 average volume, which is great if you want to get in and out, but you generally don't want to get in and out of ETFs. It's something that you usually hold for a while, and its MER is 0.05%. So essentially, for every $100, you are giving them 5 cents, which isn't that bad. You kind of want to make more than 5 cents a year anyways, so it better grow that much more. From there, you basically go from $27 5 years ago in a slow growth all the way up to 2020 before the coronavirus pandemic, which then rose to just over $35, roughly $36, $35.50 in that range, and then just absolutely demolished, and now it's gained back and growing. The reason why it's still growing is because of its holdings. Shopify exploded during the coronavirus pandemic because every company needed to get online. By the way, if you're a company and you need to get online, definitely get online. It's something that I run a social media marketing company here in Hamilton on top of my basketball training company, and there are so many companies who said before this coronavirus, I will never go online. There is no way of going online. I will not put a toy store online. I will not do a restaurant online. I will not go online. But guess what they're doing now? They're going online. So to me, it's kind of interesting how that worked out. But it does hold the Royal TD, and also it does hold Scotiabank, Bank of Montreal. These are all massive banks. Of course, these are some of the biggest banks in Canada, and they are the biggest banks in Canada. And they have rose huge because of course, they had amazing earnings. But all of these companies are extremely profitable, especially when it comes to some of the pipeline companies like Enbridge. Enbridge is huge, same as TC Energy Corp was last on the list, so you probably can't even see on this list. They are massive dividend payers. Enbridge alone pays close to a 7 or 8% dividend right now. And the last one is an American ETF by Vanguard. And of course, this one is the Vanguard Total Stock Market Index Fund. The reason why I like this one is not the dividend, believe it or not. The dividend is not 1.38%. That's not the only reason why I love this ETF. It's only 1.3%. I usually invest in ETFs that are well over 2 or 3%. Why am I liking this one? Well, guess what? Its average trading volume is 4.5 million shares traded per day. Its expense ratio is essentially nothing. And it has grown. 5 years ago, it was sitting at like $100 or $110. It is now currently being traded at $207. That is massive growth while getting paid a dividend over that time. Anytime you can have underlying equity growth on top of a pretty solid dividend of over 1%, because essentially interest is nothing, this is huge. Its top companies are, again, Apple, Microsoft. These are massive tech companies all the way down to Tesla. And then you have a bank, and then you have a pharmaceutical company, and then you have an investment company, Berkshire Hathaway. We've all seen who owns that. Yeah. One of the richest people in the world, Warren Buffett. Anyways, I hope that you've enjoyed today's video. I hope that these are some ETFs that may make their way into your portfolio. I personally love these ETFs. Again, do not trust any random person on the internet. Do your own research. I hope that you've enjoyed. If you have, hit that like button, subscribe, and I will see you guys again next time.